Well, the Reddit rebellion seemed to unite disparate voices into a powerful yell that shook a lot of institutions. Perhaps your voice was amplified, but with the anonymity of the internet, how well do you really know your compatriots? All those other people on that thread, who are they? Joining us now is someone who got to know the crowd better, Derek Thompson from The Atlantic. Derek, great to have you with us.
Good to be here. Thank you so much.
Maybe the romanticized version of this is that these are people who were burned somehow. They had families that were impacted by the financial crisis, et cetera, and they're uniting in some way to fight Wall Street. You say this is not true?
That's right. I don't think it's true. I think that on the one hand, look, I get that this was a totally irresistible trade. You could stumble onto a Reddit page and be on the opposite side of a trade from a hedge funder and really feel like you were putting the screws to him. I understand emotionally the utter irresistibility of that feeling. At the same time, I think we got completely carried away in narrativizing what happened with the GameStop bet. We were thinking that this was, David versus Goliath, that this was a new way for the little guys to win against the big guys. Look, my point is trying to punish the rich by becoming a day trader just doesn't make any sense. We've seen over and over and over again that day traders often tend to lose money. They routinely get smoked by the bigger players. And in the biggest picture, I just think that waging war against big finance by becoming a day trader is like waging war against the casino industry by becoming a gambling addict. Like, even if you get really, really good at it, you're still participating in a larger economy where there's institutional investors on either side of the trade. It's like being in the casino and saying, I'm getting really good at blackjack, but I'm also buying drinks, eating dinner, throwing chips at dealers, participating in this entire economy. It just doesn't make sense to think of this as a pure David versus Goliath story. I think it makes more sense to think of it as an extremely unique, maybe impossible to recreate, uniquely irresistible trade.
I agree that there are a lot of aspects of this particular story that may not be repeatable in the future and probably unlikely, seeing the impact that Melvin Capital has felt because of its big short position. At the same time, Derek, in terms of the impact of the retail investor, it doesn't matter what narrative we attach to this. I mean, the fact of the matter is that all of these retail investors were able to get onto this Reddit thread and all go in and exact some sort of pain, even if it's just on Melvin Capital. I mean, that happened, regardless of what the narrative is.
You're absolutely right. I mean, look, this was unbelievably weird. And as media people, as a writer, as someone on TV, it is of course incumbent on us to pay attention to extremely weird phenomena and say, what exactly is going on here? Let me give you two scenarios, though, two I think plausible scenarios for what might be the long-term legacy of GameStop mania. Scenario number one is that a lot of Americans who got in this bet, a lot of people around the world maybe, who got into this bet, lost hundreds, if not thousands of dollars. And they recognize from being burned in that way that it's really actually very difficult to become a day trader, to sort of leave your day job, sort of stumble onto a Reddit thread and suddenly make a bunch of money, that you're just as likely, given your lack of sophistication, your lack of expertise maybe, to lose money on that trade, just like gambling in a casino might be really, really fun, but isn't guaranteed to bring you savings. That's one possibility. Another possibility, I think, is that there might, as I think you alluded to, be an institutional change. You might see, I think, hedge funds say, look, we were trying to short a very popular brand name company. And when a bunch of people who felt an emotional affiliation with that brand name company realized what we were doing, they got on the other side of this bet. So it might make hedge funds and other institutions a little bit more cautious about shorting brand name companies, especially when the value of their stock is really low. But I also think that, and I really hope that in the biggest picture, if we're concerned about savings, then at the federal level, at the sort of level of politicians and elites, we're not encouraging people to take their money and throw it into a stock mania for GameStop when the thing has gone up 1,000% in the last 3 days. We should encourage people to spend less than they earn, put it in the stock market, be broadly diversified, and sometimes not even think about it, put it into index funds. So I do think that the enthusiasm of this narrative of David versus Goliath got us a bit over our skis.
Are you worried, though, Derek, that in both of those scenarios, you're really discounting the sophistication of the retail investor? And I realize that there are plenty of retail investors out there, investors in general, not even just retail investors, maybe even hedge funds, throw them in there too, that may not be extremely sophisticated. They may not, have that sort of edge, but that there are plenty who actually are sophisticated and they know what they're doing and they know how to put on an options trade and they know how to do some due diligence. They know how to research a stock because information these days is all over. It's a commodity, basically. And so not many people have that edge. I mean, Roaring Kitty, for instance, everything was public knowledge, and somehow he cobbled together this valuation, this research on valuation that even the dean of valuation at NYU, Aswath Damodaran, said was actually a reasonable case.
I think what Roaring Kitty did was actually kind of brilliant. I think that his scheme was completely brilliant. And I am not coming on here to say that I know that of the thousands, ultimately millions of people on Wall Street Bets on Reddit, that I think that they all had no idea what they're doing. A lot of them clearly had an incredibly clever plan to put the screws to a hedge fund, and it clearly worked. Citadel needed a $2 billion infusion of capital. So the reason that I compare this to betting, the reason I compare this to gambling, is that just as among people who play blackjack or Texas Hold'em, there are people who are sensational at it and there are people who aren't sensational at it. It's the same, I'm sure, with day trading. Right? There's some people who are totally brilliant at playing the market and seeing moves before they happen. But there's also a lot of people who aren't. And they are seduced by the perceived ease of this game into thinking that they can play it well just because some famous people with really funny names online have shown that they can play it well. And what we saw with GameStop, what we saw with the price of that stock declining, at the end of the day, like 99.8% from its high, 80-something, that lots of ordinary investors lost lots of money. And that's what I'm concerned about. I'm concerned about elites and politicians valorizing this story in such an unsophisticated and simplistic way that encourages more people who aren't sophisticated day traders to get into the act too late.
Hey, Derek, it's Tim. Really interesting stuff. You used the word seduced. How about induced? How about a world where there's financial oppression, the Federal Reserve has forced everybody out the risk curve? You obviously also have economic factors at work, and so people are taking risks that they're just not in a position to take because on some level they have no choice. And then the other second part of the question is, do you think this event happens as it played out if the Capitol siege wasn't, a month earlier?
Yeah, I love words. So, seduced and induced, I think, is a lovely juxtaposition. I think that, broadly speaking, you can be induced to investing in equities or into shifting your financial investments away from bonds toward equities for exactly the reasons that you pointed out. But nonetheless, you can be not induced, but seduced by a stock like GameStop when you see it appreciate by 900% in 100 hours and say, oh, I'm going to get in on this because it's going to be like, the Bitcoin story over the last 7 years and go to the moon. That, I think, is the difference between seduction and induction in this case. I think it's totally reasonable for people to look at the stock market and to look at its appreciation in the last 5 years, alongside, juxtaposed with low interest rates, and say, if I have money to save, I'm going to bet on equities maybe as opposed to bonds. At the same time, I think that the people getting in on this GameStop bet after the first 24 hours, we know that they all lost their money. So obviously something went wrong there. And the thing that went wrong, I think, is the seduction aspect of the story.
Derek, great to speak with you. Thank you so much for joining us.
Thank you.
Anytime we can say seduce versus induce, I welcome it. Delano, I think that, one issue here is going to be the notion of free speech and the role of social media. Roaring Kitty is sort of going to get the grilling because he's the representative of this Wall Street Bets forum. At the same time, what's more dangerous, a Wall Street Bets forum or an Elon Musk saying that he's going long GameStop, or a Chamath Palihapitiya saying that he's going to go long GameStop? They have power in this market. They have followers in this market. They tweet one tweet and the stock moves. What should the SEC really be focusing on here?
Thank you. That's a great question. And I think that is something that needs to be brought to the table and say, hey, what should we do with this? Because you're seeing a lot of that across the board, not even the big names that you mentioned, but everyone online posting gains for certain plays or strategies they used, and inducing or seducing, whatever word you want to call it, people into getting into these trades. And this is long after maybe the move has already been made in these names. And so you saw, as mentioned by Derek, after that, what happens? If you're someone that follows into this trade and it goes down, and you're saying there, hey, I'm the one holding the bag, that is something that we have to worry about with people that are not really doing their own due diligence, not really researching, and they're following people that are either tweeting or posting something online and saying, hey, this is something that I want to do just based on that. And that's something that, as people here on this panel, we're all looking at it and making sure that our clients are not falling into that trap. You're seeing a lot of people even now getting into different things, which again, if it's their research, whether it's penny stocks, I don't feel like they fully researched and fully understand, but they're seeing someone that they follow or admire talk about it. So I think that's definitely something that regulation will look at pretty closely here.
Shepard Smith here. Thanks for watching CNBC on YouTube.